Robinhood is doing that thing where the street whispers while the chart screams in lowercase. Analysts? Quiet. Filings? Not so quiet. Options? Loaded in both directions like a trust exercise no one asked for. Welcome back to Fintech Spy, where we analyze, overanalyze, and then roast ourselves for doing both. Not financial advice. Ever. Quick reminder, I am not a financial advisor. This is not financial advice. And if you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Absolutely, all quiet this week on the analyst front. No new initiations, no target hikes, no downgrades, just the same models humming in the background while price does its thing. With earnings starting to creep up on February 10th, you can almost feel the calm before the think piece storm. This is the part of the cycle where the bears usually dust off their concerned expert voice and start showing up with fresh notes about valuation, user growth, or whatever line item looks the ugliest that week. For now, though, analyst land is just quiet. And sometimes, no new hot takes is exactly what gives the chart room to tell its own story. On the pure news side, it's the same story. Radio silence. No big corporate announcements except for two Form 144s that got published, which seem are tied to Vlad. It seems that his trust intends to sell 327,500 founder shares, and a LLC of his is selling another 40,500 founder shares. With all the selling he has been doing, someone better be getting us a good beginning of the year present to make up for the lackluster Santa crunch that happened. On the weekly chart, RSI still oversold, MACD hasn't crossed back up, 50 EMA about $96.48. Last week printed a red candle with an open of $144.51, a high of $120.88, a low of $108.74, and volume around $119.36 million. If you're hearing the creak in the floorboards, that's the market checking whether the joists are load-bearing. Zooming out, it's the kind of chart that makes you wonder if sideways is a technical term or just a polite way to say, everyone's napping. The coil jar is getting so full, legal started charging rent. Every time someone says compression, a market maker gets their wings, and a new pair of noise-canceling headphones. Momentum? Still on vacation, sending postcards from mean reversion beach. The 50 EMA is acting like a velvet rope at a club nobody actually wants to get into, and the MACD is so flat it could double as a pancake on a brunch menu. If you're waiting for a breakout, bring snacks, maybe a tent, maybe a therapist. And let's not forget, every time the weekly chart looks this coiled, someone on FinTwit posts a Fibonacci spiral and claims it's about to unwind. The daily chart is basically a masterclass in how to look busy while going nowhere. Spoiler, it's usually just winding up for another week of existential dread and meme inflation. Hood is still living under its $50 EMA like a teenager refusing to leave the basement. Thursday's drop from $118.88 to $110.13 was the kind of move that makes you check if your charting app has a panic button. Spoiler, it doesn't, but it does have a zoom out and pretend it's fine feature. RSI and MACD are both trying to crawl back toward neutral, but honestly, they look like they're negotiating with gravity. The price action is stuck in that awkward phase where bulls and bears are both waiting for someone else to make the first move, like a middle school dance, but with more money and less chaperoning. Range behavior is the name of the game. Every time price tries to peak above the 50 EMA, it gets swatted back down like it forgot to RSVP. That Thursday flush? It's now the official, we don't care, unless we tag it level, which means everyone will ignore it until it matters, and then pretend they saw it coming all along. On the 4-hour, RSI was way oversold and is working back toward neutral. MACD is pressing more negative. Price sits well below the $50 EMA. We rebounded at the $106.33 fib level, which is now the spot everyone swears they totally had marked. Net read. Reset energy without resolution. RSI easing. MACD leaning down. Price under the $50 EMA, and that $106.33 tag giving the tape a fresh bruise to poke. Looking at the January 23rd options chain on the put side, the standout shelf is $105 with about 6,000 open interest. On the call side, there's a split-level loft at $116 with around 5,000 open interest, and a penthouse crown at $118 with about 9,500 open interest. It's less a market and more an apartment building with very opinionated neighbors. Implied move is posted around 51.09%, plus or minus $7.25. The kind of number that makes the risk team show up with clipboards and a supportive nod that somehow feels threatening. Read it like this. $105 is the downstairs tenant who bangs the ceiling with a broom when price gets rowdy. $116 and $118 are the upstairs folks dragging furniture at 2 a.m. because feng shui can't wait. If we drift toward any of these doors, expect peeking through the peephole, chain sliding, and suddenly everyone's just stepping out for air. Practically, those open interest clusters build little respect zones, not iron walls, more like velvet ropes that price pretends to honor right up until it flashes a fake wristband and strolls through anyway. If one side blinks, the unwind tends to make the hallway feel tilted. That's not mysticism, it's just positioning, deciding to stretch before sprinting. For hood traders, this week feels like a quiet gear shift instead of another episode of full-blown chaos. Analysts and headlines are on mute, but the weekly just printed a red candle. The daily is still under the 50 EMA, the 4-hour is rebounding from oversold, and the options chain is loaded with opinionated neighbors. Big picture, Robinhood doesn't look like it's collapsing. It looks like it's resetting and choosing a direction. Whether that direction is a clean march higher or a fake out that dumps back into the low 100s will depend on how much fuel is really behind this week's tape and whether those open interest clusters are early or just eager. If you agree, disagree, or think Hood is just coiling for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below: coffee, memes, or pure denial. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over-analysis and high-quality sarcasm.